Hello everyone. It's today's 7th of February 2019. So this a webinar I did yesterday on pin bar. I hope you're able to get it. You need to go, just log into the main site. Just a second. This is the webinar we had yesterday. It was on how to trade pin bar. So you need to just go to the main site, and then we have the first option here, education, and then there's the webinars. Then you'll be able to get it. It is here. So a lot of things we looked at, very many things. You can just click and then you'll be able to hear and see everything that we did yesterday. So that should be that. Let's look at exactly what we have for the day. If there's any good trade, we're going to look at Euro USD, maybe GBP USD if there's any trade, USD JPY, SP500, and then we're also going to look at Brent oil and gold. So let's start off. Just a second. We'll start off with the first one, which is Euro USD. Should be here. And on this chart, I hope you remember we drew a line. This is the line we had last week. This was actually a resistance. Then price went down. Price was not able to go above it. It went down, came back to the same point. Then it went down, then back up. It went down, then back to the same place. It went down, and we expected the price to come back to the same place that we can pick a sell for the longest time. So that did not happen. Instead, the price is bouncing off from a level here, which is also very significant. This line here, 1.1469, is very significant. So as long as the price does not go above it, that's still a very good place to sell from. We have a resistance, a resistance, a resistance. The entire place was a good resistance for around, since this was 2014 up to 2017. It was a good resistance. Price went above it, came back. We saw that false break, then back to the same place. Then there was this break to the lower side. It came back up, and you can remember we actually took a sell from the first attempt to get back to this level. This one, we took a sell from this point. Price went down, came back up. It was still a sell. You ought to have sold it for the second time at that place, and with that sell you should have a take profit here, there, and your next take profit should be around here. Then the last one should be at the very lower end, which is here. So these are the three lines we're looking at. If you're on this chart and you want to trade it, you picked a sell from the up at this point, leave that sell up to this level, 1.1308, and should price go below it, you expect price to proceed further towards 1.0844. And in case the price goes below this level, then it should proceed further to 1.0493. So we have two lines. We have this, we also have this, and then we have the last one. These are the three levels to look for trades. We took a sell, we are holding that sell up to 1.1308, and should price go below this level, then we expect it to proceed towards 1.0844, which is here. Then the next level we want to take profits from is 1.0493. So that should be, I'm not going to add much on this pair. We actually are in a sell already, so we still expect price to proceed down. And if you want to trade it, just look for a sell. We move to the next chart, which is GBP USD. And GBP USD, the line I'm having here is where we wanted to buy from previously, but as you can see, the price has gone below it. So we are not going this it means if you bought it with us here, you've probably been stopped up. So the next place to buy from is this point here. I'm marking it as a zone. This was just a resistance which was broken. Price came back to the same support, now a support. It went up, a support, it went up, a support. Then there was this false break to the lower side. So immediately you saw this one. Just a second, let me highlight it. This was a very good false break to the lower side, which means anytime the price attempts to come back to it, we are going to look for a buy. We want price to come back down up to that level, then we'll pick a buy from that point to the very top, which is there. So this place where we are buying up to, this is actually a monthly level. That's why we buy it from this point and we expect price to proceed towards it. So the correct place to buy from actually is here, not where we said previous. So assuming you bought it here and you stopped out, just leave it at that, but wait for price around this point here. You may want to place a pending buy limit here, have your stop loss down there, and then you should have a take profit at around 1.1407, which is at the very top here. So we move to the next chart, which is USDJPY, and USDJPY is moving perfectly as we mentioned previously. So you can remember, while price was here, we said that this was a very good monthly level, a weekly level, sorry, just a support. Price went up, a support, then it went up, a support, then there was this false break to the lower side. The entire place, that was a false break. Then we took a buy from this point previously, and we also took a buy from this point. So while price was here, this was the correct place to buy from. We are buying here not just because this is a support, but because the same place we've been buying before. Just look at it like this. This is the first buy, second buy, then there was that third buy, and there was another place here in the past where it was used as a good buy place. So we've not only bought here once, this the second time here, the third time, even the fourth time. It has been used previous. So you bought it here, take profits around 110.51, then expect price to break even higher, retrace back up, then you pick a second buy from that point up to the very top, 114.32 here. So I want to check this chart, maybe a lesser time frame, to see if there were better trades. I will start with the daily. Just a second, let me shift straight to the daily chart. Daily here. So on the daily chart, the previous day's candle was actually a pin bar. We had this pin bar here, and then it was emerging from a clear level. So this is a resistance, as you can see, even from the past, a support, broken, a resistance, and there are multiple exhaustions. Then we've gone above the same level. Now we are seeing exhaustion to the upper side. This is an indication that we are upward. So if you want to trade this pair now, then maybe you want to place a pending buy limit around 108.79 with your first take profit here, and the next one should be at the very top, which is here. So we expect price to proceed upwards, then retrace back to the same level, which is there, so that you can buy it upwards like that. So assuming you didn't buy it here, you still have an opportunity to buy here, and you may also want to buy it when it breaks above this level. All those buy trades you have, they should have their take profit here, 114.04. So we move to the next chart. No, I'll check this also on the daily. I've seen a diagram which I had previously. It looks good here. So on the daily, on the 4-hour chart, we have just a resistance, and we want price to come back to it, retrace back down, then break above it, retrace back, so that we can buy it even higher. So this is the expectation on the 4-hour chart. We want price to keep consolidating within this wedge. It should go up, retrace back, but should be supported by the lower one, something like this. We want price to remain within this wedge, and in case it breaks above it, then a retracement back to the same place will mean we are picking a buy from that point up to 113.96, which is at the very top here. So we move to the next side, SP500 here. is pulled. We are now pulling back down, but this is what we had last week. From last week, this is what we keep mentioning. We had a level at the top there. So there's one thing which you may have noticed, that the price is here, but I'm actually focusing on this upper end. It's because only that there I'm finding a clear level. So there's no point of coming here and then you start drawing lines here if the clear level is at the top. So that's why I'm having a line at the top, and I'm not having any line here, and I have a line at this side, but there's no line right where the price is. So if you look at it like that, then look at it like that, you'll notice that this was a resistance, this a resistance, then you also have a resistance at this point, and then you also have a resistance at that point. So basically we want price to go up, then retrace slightly to this level, the same level which was a significant level in the past there, so that we can buy it from that point to the upper side towards 28.7. So assuming you want to trade this pair correct, this index correctly, just wait for maybe a retracement back to this level here. Wait for a retracement back to this place, 127.15.9, then pick a buy from that point. Expect price to proceed up to 28.16.5. Then should price ascend above this level, just wait for a retracement. A retracement back to the same place which has just been broken, so that you can buy it for the second time up to the last level, which is here. So we took a buy from this point, we are still holding on to that buy, and I'm going to add an indicator so that to confirm that we are upwards. We come here, indicator, and then average directional movement index. So according to this indicator, this is a very good indicator that it's used for trend. It's called average directional movement index, and this is how it works. That it has three lines. We have the first dotted one, which is red, then you have the next dotted one, which is green, and then you have the complete one, which the color looks like dark blue. So it works like this. Anytime you have the main one, which is this above 25, it means there's a trend, but it does not indicate which trend. Then anytime we have the green one above the red one, it means there is an uptrend, that buying is more than selling. So like from the first one, where we are now, you notice that we have the complete line, which is this above 25, which means there's a trend, and then we have the dotted line, and this now means that we have a trend, and that trend is upwards. So that should make some little sense, that you can use this actually to analyze the market to understand the direction. So that's how you read it. We have the main line, which stands for there's a trend as long as it's above 25. Then you have the dotted one, and that dotted one means that the dotted green one means that we have a trend, and that trend is upwards. So the opposite is true if the red one is above the green one. Like you can see from this point, just a second, you can see from this point here up to this point, like that. This is something that I think you need to understand how to read this indicator very well. So we have this one. In this case, there's the red one is above the green one. That means the dominant trend is downward. And at the same time, you find that while this was true, the red dotted line was above the green dotted one, the main one was above 25. So that meant that we have a trend, and that trend was downtrend. So it is that which pushed the price like this to the lower side. So I hope that should make sense. So if assuming you want to use this to do analysis, then just know that where we are now, the trend is actively upwards until this green dotted line switch places with the red dotted one. So far as you can see, we are still several points away. The red one is here, the green is here, and then the red one is at the lower end. They are very far away apart. So that means we still have an active trend, and that trend is upwards. So expect a move up, then a retracement, and then we proceed even higher towards 28.7, which is at the very top here. So basically this is just a V, should close at the very top. We move to the next chart, which is Brent oil, and I'm going to look at it from a different perspective today other than what we said yesterday. Brent oil is here. We start off with the weekly chart. So the most important thing on this chart is that the last week's candle, those are pin bar, an inside bar, followed by, this is a bullish inside bar, followed by a bullish pin bar. What this two means is that the price is still upward. So if you're on this chart at the moment, then just expect a move upwards. But we'll add an indicator to confirm that the trend is upwards. The same indicator we had on SP500. So if you look at this indicator, so far there's no switching place. So we still they're at the same place. There's no clear trend. So on the weekly chart, there's no clear uptrend or downtrend. So we leave it. Daily also there's nothing. We're still consolidating. Then for hours, we have the green one being above the red one being above the green one, but the complete line which should show us the trend is actually below 25. So there is no clear trend still. So what this means is we remain flat on this one. If you are doing indicators, then just remain flat, but there's a level here which I think is significant based on price action. We have this. So as you can see, like it's like I'm struggling to force it. I'm struggling to locate this line. If you find yourself trying to draw it but it's not drawing itself, then just leave it. It means we are forcing it. So we leave it. On Brent oil, I recommend you remain flat. We don't do anything, just let it hold on. Look at the other pairs, the ones we have. Maybe you may want to look at USD/JPY, maybe GBP/USD or USD for a sell. But Brent oil, we are flat. Then we move to the last one, which is gold, and gold should be here. So we also start this one from the monthly. I'll start that from the monthly. And there's a level which I drew here yesterday. We had a level at this point. This is a monthly resistance. And also I pick a zone which is there. So the entire place, as you can see, is this was 2010 until now. Ever since the price went below, there was only this month that it attempted to break above but could not remain up. Instead, it broke again below, and since then the price has not been able to close above it. So this is a very good place to sell from. If you are looking at the monthly chart, then the best place to sell gold is around 1350.93. You can basically see, just let me highlight it. We have this. We have this one. We have a resistance. Then we have a resistance. Then there's the next resistance which is there. And then we also have that as a resistance. Then we also have that as a very good resistance. Then we want the same place to be a resistance in the future. That is, in case the price gets back to it, then that will be the correct place to trade from. So as you can see, this place has been holding for a long time. Look at this, like this, from this point here, when the price from 2013 until now, the price has not been able to go above it. So if the price is to come back to that place, then this is the correct place to sell from. At the moment as it is, you may be tempted to look for a trade, but the actual good place to sell from is within this zone. So I'm seeing something that looks like a trend line. Let me see if I can get it clearly. This one. We have that. Looks like a very good trend line. So if I do it like that, it makes a bit of sense because I'm not actually struggling to do it. It has drawn itself. We have a support. we also have a support, then we also have a support. So basically what could happen here is the price may bounce from that point, head downwards. This is one scenario. This is what could happen possibly, then retrace back up before embarking on a move to the lower side, something like this. This is what is likely to happen. The price may move up or something like that. So if you pick a sell from this point and somehow you manage to hold on to that until the price has gone below this trend line, then just know that you are still short. And assuming you take profits maybe when the price hits this trend line, then this is the next best place to sell from. So this is one direction. Assuming now maybe the price breaks above, instead of bouncing to the left side, it breaks above, then just wait for a retracement so that you pick a buy from the same point we are looking to sell from, like that, up to the very top, which is here. So this should be the correct place to buy from, and this should be the correct place to sell from. So on the lower side we have levels like this where we'll take profit. We also have a level at the very lower end, which is this one, where you may also want to take profit from. This and this. We also have the upper one, which is this one. So that should bring us to the end of today's overview. We basically looked at everything we wanted to look at. We have Euro USD, we have GBP USD, we have USD JPY. We've also looked at gold, Brent oil, and SP 500. So I want to mention something here about this bonus, which is this one. So this is called 200% bonus, which means for whichever amount you deposit, as long as it's from 500 USD, you qualify for at least 500. You qualify for at least 200% of it, sorry. So you'll need to follow these steps here. Open an account, then you verify personal data, then enable bonus for trading account, which has to be either Classic MT4, Classic MT5, or Market Pro MT4. Then you'll fund the account and then get the bonus. So that's just the simplest. So there are also terms and conditions here which you need to read properly, ensure you understand just everything on this page before you apply for it. Understand all this, everything. So thank you very much. See you again tomorrow at the same time.